Good morning, traders. Hello and welcome to another live Bookmap webinar. Today we're joined by Scott Pulcini, a professional futures trader. This session is held every Thursday at 10 a.m. Eastern Time, and it forms part of our free education here at Bookmap. Once we get going, please feel free to ask questions during the session. You can use the YouTube chat or the advanced webinar Discord text channel, and I'll do my best to get through all the questions, so please don't be shy. Before we jump into the live analysis with Scott, I just need to run through a couple of things, so bear with me, guys. You can find out more about Scott on his website, scottpulcinitrader.com, and you can also connect with him on Twitter, Scott Pulcini TR1. And the disclosures here. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Good morning, Scott. Can you hear me?
Hey Sam, how are you doing?
Hey Scott, I'm good. Good, thank you.
Good. Yeah. Share my screen. My screen.
Yeah, give me a second. Okay, I've got you.
Alrighty, little crazy morning so far. I haven't really done anything, but I'm just kind of sitting in the weeds waiting, trying to decipher this price action. So, yes, opened up. Obviously, it was all over the place. This is just a regular trading hours chart. And again, sorry for all the background notifications. For some reason, every time I mute this thing, it just never works. Let's see if I can. No, it says the channel's muted.
Just for you.
Anyway.
So Scott, I'm not hearing any notifications. So maybe it's just on your side.
Oh no. Oh, I can definitely hear it. Okay. So anyway, the chart, that main hourly chart is showing just the regular trading hours. This was obviously the clown move after the number. It's always faded. You get the initial move down, then it fades, and then it just comes back. So it's basically just bounced around here. And now came down here. I was pretty convinced this thing was going to at least sell off to these areas. These important zones that I draw are from prior events, right? So this is directional conviction. It actually held here, led to that move down. Grinded through it yesterday. We opened up here, gapped up, and then right through it, and it looked like we were going to go right through it, but it pretty much held. It spiked down a little bit below here. The zone isn't that important now because we have traded through it, but I was watching that for clues on how these markets react to these zones. Is one, you can use them for support and resistance, and the other thing is how the market reacts. If the market comes down and just rips right through zones, that's telling you something's up, right? So because usually they should at least hold it initially. And also I'm going to be putting out a subscription service for these zones. I've got like 17 different products that I post every day in my room. It's going to be pretty cheap for you guys, where you don't have to go in there. It's basically like I post in my room every day. So it's like under these charts for all these different products, right? So it's it's not hard to learn to draw these, but the point is, like, if you're watching multiple markets, it does take a while to go in there and redraw them and figure out the important areas. So I will have a pretty cheap subscription for this. I'm going to put out in the next day or two, probably like, 30 bucks a month or something, 34 bucks a month. So that's nothing for the work that will save you drawing those zones. Trust me, it takes me at least an hour a day. All right, so anyway, we're kind of holding in this zone now, and when we came down here, there was some major buy ice. I was just commenting in my room before I got on here. This is like 6,000 buys. It started over here. I drew this zone, and I could see this bouncing and coming back for now, but I'm looking for a retest of this area to go long, right? Because, so I remember my room was asking, what's the thesis, what's the call here? And I said, into that zone that I just showed you, right? And I said, well, I would expect it to be support, but you want to see how the market reacts to these volume events, right? So I always have a thesis. I always have some kind of opinion on what's going to happen, but I let this real-time volume tell me. So this is telling me that somebody's holding this market up right now, and you can see it on this yellow line. This is the icebergs on chart. This is showing me this was one house. Actually, it started over here. I only draw it where the concentrated volume came in, so you can see this first spike was 1,200 buy ice. The next one was close to 1,200. The next one was 1,200, so that's like 3,600. Then you had another 1,200. That was this blue zone. Then another 600. Then another 1,000. All right, so this is kind of, this isn't normal where you'll get all of these spikes, and I was trying to decide how to draw this zone. Do I make it one big zone? Because this basically is one house, and somebody's obviously taking a stand here, and it helped. Or, what we do in my room as well, because we're trading a couple different types of trades. I always recommend drawing the most recent volume event if it's threshold, and this is definitely 1,000, so I drew this zone too, and the market moved away from here. So what's going to be tricky here is I do want to get long this because this is shown. This is, they responded the right way, more than an ATR above this last setup, which in this spreadsheet was, let's just make sure this is correct. That's still right. So from that last setup, 74.50 was a full ATR. And it obviously went above that, and it actually got an ATR above this whole area, this initial zone that I drew, this light blue one. So this will very likely, and this is actually one of the trades we play, a retest into these areas. I'm just hoping we can get all the way down to this for the retest. It may not get all the way down to this just because of all this other stuff that was in here. So I'm going to have to judge where I go long here on a retest failure. So this is a conservative type of trade. Again, you can enter these volume events one or two ways. You can wait for just to break outside of an ATR and get in, or you can wait for an ATR, a retest, and then a failure, and then get in. Right, so I'm being conservative here because this market is bullish, obviously, the last however many days, but we did kind of get through that zone, and it's not. This is not like a layup area where I want to be very aggressive. So I'll wait for the retest. So you can see here, I may miss this trade because I'm waiting to see if we can get down somewhere in this area to retest this last zone. But this may just bounce like it just did off of the top of that zone. So, and that's not a coincidence, right? So we'll see if we can get deeper in this zone, and then I'm gonna, I'll probably go long if it goes, deeper in the zone. Hopefully, can retest this dark blue zone, and then retest out of there, and then I'll go long. The stuff I look at, Ludwig levels. These are. So you can see here why this CBD is kind of flatlining and moving down. Well, this is showing you CBD is cumulative volume delta. It's just showing you who the aggressors, the buyers or the sellers. Well, the sellers were obviously aggressive into the 6,000 buy ice, right? But this does not tell you the whole story. Yeah, sellers were aggressive, but guess what? The sellers ran into a mouthful, 6,000 mouthfuls of buy ice, right? So that's why this is not something like a red light, green light that you can just trade directly off of, like divergences, so on and so forth. Yes, it's important to watch, but you've got to know the context of why this is happening. And the reason this is going down and kind of flatlining is because they were selling it in a huge buy ice. So the important thing to know is this area is very important. So whatever way this breaks out of here, you're going to get the big move, right? Because these are invested traders. Somebody sold it like crazy, and it looks like one house bought it like crazy, right? So all these sellers ran into all this. So this is the major zone, right? It's a large zone. It's almost 30 points wide, but you can bet the move out of here is probably going to be multiples of that 30 points, because whoever's wrong here is not going to be happy, and they're going to have to get out of their position.
Soy Oilsford sells EL 151 contracts.
And you can see here, market profile wise, I'm always trying to come up with the thesis for the day. This was an important market profile from early December. This day opened up in here, failed outside. We came in the other day, failed again. Yesterday finally accepted in, came up, stopped at the point of control. Today, tried to get out into the number, no, tried to get it down. Now we're just kind of still in here. So the move out of here is going to be the move, very, very likely, because we know there's fuel in here now that I just showed you, right? So if it breaks out, I would expect at least to run up into these areas, at least the top of this. And if this comes back and fails again, then I'm expecting down to here. I'm going to make this, I can actually make a profile. So these blue boxes are composites. They're the value areas. So these are single days. So when days merge, and this is a multi-day, obviously since 12:15, very important area, I will merge them and then draw what's called a composite value area. So you can, the rule of thumb is you want to see days overlap to merge them. So these two would not be merged, right? But this value area, the third day overlap that one by obviously more than 50%. So you can merge all three and draw a new composite. So I'll do that just to have a new reference area. Merge that, and you can see once you merge them, you'll know right away if they're legit.
Sell NQ 153 contracts.
This is right where this tested yesterday and came real close today. So this is going to be very telling too. If this market comes back, breaks out of this current one, and gets inside this one, then it's going to be a free fall. But as of right now, it's looking long. And this is exactly what I thought I was gonna. That's what I was trying to make a decision here. Did I want to play a retest to the top of this zone, which was the start of all that buy ice, or was I going to wait for more inside? Hopefully get down here. I didn't get it here. It retested this zone to the tick and then off to the races. So that trade looks like it's obviously missed. It's already 20 points higher. But the ATR, this is a perfect day example. I tell you guys every single webinar, you guys on here that are risking, I like to risk 3 points when I put on my ES trades to make 6. A day like today, good luck risking 3 points. You're going to get stopped out pretty much every time on nothing. You can get lucky and you can catch a runner, but this ATR is 12 points, 12 and a half points. You're going to risk a standard 3 points today. Like I said, good luck. You're just asking to get whipsawed, right? So yeah, this moved 20 points off of the top of that zone, which is a lot. I'm going to actually get rid of this. It's annoying me. It's throwing me off. So that was the ATR. It definitely
got sell LE 171 contracts.
I definitely got an ATR out of that zone, and I got an ATR out of that zone as well. And here's your retest, and here's your failure. But again, I was looking for a deeper test in here because of the most recent setup, and I just missed the trade, and it is what it is. But my point was, yeah, it's moved 20 points, but 20 points is nothing today. The ATR is 12. It means every 5 minutes, this average rotation is 12 and a half points. That's why you have to adapt to current volatility, and that's what we do in my trade room with this spreadsheet. That's proprietary. Please don't email me asking for it. If you join the trade room, you get it. But you put in your ATR, you put in your zone prices, and it tells you this is the one strategy we're doing in the room. And then this is a positions trading strategy. And all your prices are right here. You put in your account size, put in what you want to risk. You shouldn't be risking more than 1.5 to 2%. It tells you how many contracts you should trade, where your entry is, where your exit is. Again, this is adjusting the volatility. So if the ATR goes up to 20, I don't care if I'm risking 50 points. I just adjust my size. I don't just trade point value. I'm adjusting my size to the volatility. So very important. Most traders don't grasp that or want to grasp it, and it's going to bite you eventually if you don't. So All right, so none of this was a sweep. Just gets mad when I call them swipes. That was a sweep, obviously 2,300, and we're not trading off of these currently, but this is important information as well. I'm just waiting for a new setup now. I missed.
By NQ, 163 contracts.
Let's just go to NQ. We've had a couple things happening there. This is interesting that this did not get done on this liquidity. Got a little front run away from it. They can't be real happy about that. Let's see what's going on up here. I'm gonna erase these prior. These were like pre-market zones. Let's just move to the most recent stuff. So I don't confuse myself, which I do all the time. All right, so you can see sell ice here. These swipes, someone was swiping this thing. Someone swiped 1,000, another 300. They were swiping right into buy it or sell ice. So this is getting interesting as well. So, you know, to draw these zones, I know I say the same stuff every webinar, but there's always new traders on. You take the spike. That started all the way, this is a pretty big zone. So that started way back here, all the way up to here. That's actually, it's not that bad for the ATR. The ATR is like 51 points right now. So there's another example. If you trade NASDAQ and you risk 10 points on a trade, your standard 10 points, again, good luck. Today, the ATR right now is 50. So what I do is I take my bubbles off, and then I bring in this, if you right click over here, whoops, hold on. So if you right click here, you want to bring in this, hold on a second. So if you right click here, configure visible components, make sure your last price line is checked. And that's going to show you last traded price. It's much easier and more accurate drawing these zones. So that actually started down here. And that sell ice came all the way up to here. You can see this spike. Here's your crosshair, and all you got to do is see where it ended and see how many prices fell within that zone. And that is right there. That's my zone. I may need to adjust it a little bit. I'll zoom in here in a second. I just want to see how this market's responding. And actually, I just did all that, and there was already another volume event, which I just heard, and for some reason it didn't register. So we'll leave that there for now. That sell ice, but now you have buy stops here too. 263. So now we're going to draw those. So I don't want to confuse people, but you know, the stops you can see start here with this red line, and here's where the spike started. But with stops, we've talked about this on prior webinars. Whoever sweeps this order book, it actually started here, but it started moving up here. They get first right to the orders. So whatever offers are in here, they get first right. And then when they're done, so say stops were sitting here at 92.25. Well, these stop runs don't fire off until this person is done with their sweeps, sweeping the order book, right? So I like drawing my zones to where the sweeps that trigger the stops, right? You could draw them right to the stops, but my point is the stops could have been right here, right? So you know, anybody who trades knows many times when you put a stop order in, you get a worse fill. It's called slippage. And you're like, well, what the hell was that? Well, the reason that happens is because this trader, whoever this was who swiped this, they get first right, and then the stops fire off. So the stops actually could have been right here. So that's why I draw it starting there. I know it's probably confusing if you're new to this, but it will slow down for you. So try to make my stops white or yellow, just so I know what type of. I mean, my sell ice is black, my buy ice is blue. I just want to know what type of event it was when I glance at the chart. So you can tell that's not correct. I stopped it there, but this spiked all the way up to here, and that was still part of this spike down on the subchart. So now I gotta it's not building these zones. They are supposedly working on a answer for that, where you just what I've been asking them for a year is just where if you can click on this and it just draws the zone. I guess it's harder than it looks, but supposedly that's in development, so that would be awesome. That would really save me thousands of hours. All right, so that's your most current zone. So you had the sell ice here, now you had buy stops here. Quickly, I just want to see where we're at on this. So this is NASDAQ again. This market opened up here, pretty much right at this prior zone. Sold off. Looked like it was going to rip right through this zone. Buying tail, directional conviction. This is all very important information. Now it's about to get out of this zone. This gets out of this zone, should be coming up here. All right. So very important to come up with a thesis based on these zones, based on market profile, which we'll look at right now. So we're actually at red lug right now. For me to go along this setup, I need to see new lugs. I'm not gonna, you guys know, these are called Ludwig levels. They're very, very powerful. The second most powerful thing I've ever seen in my 20 plus years of futures trading, next to Bookmap. Bookmap's number one, obviously, but these things are ridiculous. Just go to ludwiglevels.com. I say this every week, but again, new traders on here. She's got a 3-day trial. You can sign up for the trial, say you saw this stuff on the Bookmap webinar, and you get special pricing. So anyway, what's the thesis here? So I did the same thing here as I did in ES. I just did this a little bit ago. So you can see here, these were not overlapping. So this is a single day, this is a single day, this is a single day. Well, this single day, 50% of this day fell within that day. So then I merge all three. These are really, really important. Support and resistance areas, and to come up with some kind of thesis, right? And what's really happening in these markets. So we saw the zones, how they just ripped from the zones. Let's try to accept in here. That's telling you something, right? Now we're getting setups. It's go time on the long side as long as we can get some new lugs built here. I'll keep refreshing this because I forgot to restart it overnight. Sierra chart, you gotta restart it for some reason. So that looks okay. The other thing we're using in my room a lot more frequently is the footprint. So this is just like cumulative volume, right? Like this is not red light, green light. It can be sometimes, but you've got to use this in the right areas. You've got so many traders that are like, oh, look at this huge. First of all, it's subjective, right? Because it depends on what kind of range you're using for your to look at this, right? So if I have a 5-minute range, it's going to look a lot different than a 10-tick range, right? So that you just have to be careful using this, but in the right areas like volume setups and zones and market profile areas, then you can use this more often. But you'll get, more liberally, I should say. But you'll get guys like, oh, look at this bar right here. Well, there's 1,000 buyers there. Actually, that was the high delta. This is the actual what it ended up. You're like, okay, I'm going to buy right there, and I'm just going to put my stop below there. Yeah, you lose, right? So the point is, yes, keep an eye on this. I'm going to show you one really important instance from yesterday that I showed my room where I was going to take a trade in one of the reversion trade we're taking. I'll just show it real quick just to give you an example of when you want to pay attention to this thing, right? So, see if I can find it. It was a while ago. I want to show you guys this because it's pretty important. There's Eddie Murphy, because I was talking about the desert island I'm going to buy. Desert island. Why can't I find that chart? There's Allen Iverson talking about practice. So we actually have some fun in the room too. I didn't even see this one. So anyway, where is this chart? Sorry, guys. This was actually the set. I'm going to show you guys this a little later too. We have distinct playbooks. I'm actually making a playbook a week for the room. Why can't I find this trade? Oh, here we go. This was at 11 o'clock yesterday Central. So this is what I wrote. So this is where we start using the footprint to disqualify some ATR reversion trades. You can use it for position trades as well. On the up bar, it was out of nowhere. After there was sell ice set up. And that's what I was trading reversion to. But anyway, volume spiked to 60,000 contracts and at 5,500 buyers. This is huge volume where passive sellers got run over and most likely will be puking soon. This didn't show up on the relative volume chart as 2 times normal, but footprint tells you to stay away as far as shorting or the reversion trade. Look at this. mean, this is where you want to be paying attention to the footprint chart, right? You got 1,200, 8,000, 4,000, 6,000, 60,000 contracts. Do you think that might be some traders getting run over? Now, remember, yeah, this is important. There were net buyers. It was 5,500 net buyers, but somebody was selling this thing, right? And they weren't selling it aggressively. They were selling it passively, meaning they had resting orders in the order book. Well, they got them all taken from them. Guess what? You don't want to be short when 60,000 contracts were just taken from sellers, right? Meaning, it doesn't mean it's just a green light go signal, but with the other stuff we're using, you want to watch this. But as soon as this cleared, you can see this tried to get back down, not even close. This never even sniffed this and went up like 50 points after that, right? So the point is, this is where you want to be paying attention to the footprint. But anyway, we're using a lot more often. You can see right now, nothing's going on. This is just Algoville, back and forth, back and forth, back and forth, light volume. You want to we'll keep an eye on this. When we see like 20,000 contracts hit, then it's going to be go time. So this is probably going to chop around. You know, everyone's long, like thinking this is going to rip. And then this is where the algos take over, just like this. And then they start playing games with your money. This is why you can use the footprint. That's a little, you know, that's a little concentrated as far as putting your risk below those bars. But the volume events, actually, I want to trade wheat today. I think it's going to rip. I mean, soybeans, we'll go over that, what I saw yesterday too. But anyway, this is why I put my stops in ATR to the volume event, because when stuff starts, nothing's going on, these algos start whipsawing you out of your cash, right? So for me to be, I'm not long yet, but if I were long, my stop would be below. It actually would be an ATR below this latest volume event, but that would be outside this zone because I'm forcing the market to actually push through important volume areas to stop me out. Instead of light volume, whipsaw, take your money. Algos are 85% or more of the market, and they are here to take your money. And if you think it's otherwise, you are in the wrong business. And then there you go. This is just nothing's happening right now. So what I would love is I would love for these algos to push this down into this area one more time, because nothing's fired off here. I don't think, no. So nothing threshold's been fired off. That would be beautiful if this came down here one more time, and this is the last volume event, this dark blue zone. That would be awesome. But until then, I just sit here patiently. Either that happens or a new volume event happens, and then I'll go long, potentially.
353 contracts.
And here we go with the take your money if you're long. Right? All right, so this is a new volume event. I'm going to draw this. These lines are starting to get, I'm going to just get rid of this sell ice right now because this is happening right in the middle of that. So what do you think that is? What do you think this was right here? You guys are probably part of this, right? These are all the longs that jumped in right there and it didn't go, and then they just puked them out, right? So this is what I'm talking about. This is what these algos do to you in random areas. So if you can, let's actually look at NQ. That's why we use these volume events to find out where the really important areas are, right? There you go. This wasn't even that heavy a volume. I mean, it was 3,000 contracts. It is heavy compared to what was prior, but all that is the whipsaw. They push it down low enough, they get the pukes, then it goes, right? Maybe. We're going to judge that by how it reacts to this volume event. And also, what do you guys see down here? So I don't think it's going to go yet. I think, no. I don't know, but I know. This algo stuff and the push is somebody's trying to get filled down here, aka liquidity. Remember, talk about it every webinar. It's uncanny how these are magnets. It's not, like I said, if you're new to this and you bring up Bookmap, you're like, oh, look at all these buyers down here. I want to go long. Not yet. You got to wait for these guys to get filled because it will come down and fill these orders. I'm not saying right this second, but over the next, while we're on this webinar, these will get filled. And then it's probably go time to the upside. And there's an actual way both these liquidity levels get filled, and it doesn't violate this volume event to the downside, and we can still go long based on this volume event that just fired off. But I can promise you these guys will get their fills, and it's probably going to happen here in the next couple minutes. And like I tell everyone every day, market are 100% manipulated. They're manipulated by the people that can push them around. How do I know that? Because I used to manipulate the markets when I could trade 3,000 in the S&P contracts. So that's why my volume setups and my course, it's all based on my actual experience as a, I don't want to say market manipulator, but when you can trade size, you manipulate the market, right? You push the market around where you want it to go. It's not illegal. I mean, as far as that's what's illegal is putting in orders and pulling them. They call it spoofing. That was never illegal when I was trading either, but it is now. But just pushing the market around, that's manipulating, but it's not illegal. If you got size, you can do whatever you want, right? But knowing what they're trying to do and where they're at, this is the key. I say every webinar, if you can't beat them, hey, look at that first one got filled, and here we go. Here's the second one. It's the same patterns every single day, right? I just was in the middle of a rant and I forgot what I was going to say, but because I was just so shocked that this liquidity got filled. All right, so my point was on this newest setup. Let me change this color too. I can still go along this setup because when I can't go along this setup is I think it's an ATR below this area, the bottom of the zone. Not even close. ATR is 50. This has got to get 50 points outside of this zone, so down to 14,000 for me to even disqualify this setup. So, hey, what do you know? They got their fill, and we're probably going to go up now. Screwed all the longs, the weak-handed longs. Get rid of all this stuff. Sorry. I deleted that other stop zone. That's all right. Let's just get it out of there. It's fine. All right, so now what I'm watching here, now I got to make a decision. Do I want to go long aggressively off of this zone? So this is another thing we're working on in the footprint where, you know, like especially a day like today, because I usually demand outside of an ATR out of the volume event to go long, right? But if the footprint, if you see certain things in the footprint, and actually I'll go back, I think it was 2 days ago. I'll see if I can find that if it slows down here. An instance where it was a stop run, it was just like this, but it was to the downside. So there was buy stops, and we saw it moved above the buy stop zone. It was net selling, so the buy stops weren't real buying because it's usually guys just puking. And then there was net selling just above, and I actually took the trade. It was just a one lot, but it worked. It worked for like 80, 90 points because I was just trying something new. I said, don't try this because we're going to start incorporating the footprint a lot more. Point is, I saw what I needed to see. Just pretend this was buy stops. That wasn't real buying. Then I saw net selling in the footprint. And I said, okay, as soon as this breaks the zone, I'm going short. And I'm going to just risk above. Meaning this is a good place where I may be able to go long if I see what I want to see here. So let's see. Sorry, that was kind of a long-winded explanation there. So here is your, so this is a, what is this? 40 tick. So this is a 10 point, which is nothing today, obviously, 10 point range. So this didn't really tell me much on this move down. This was the stop run, 745. Actually, I take that back. This was the stop run here. So the sellers still were engaging. So this is not what I was talking about, right? So where I could have potentially, so here's that volume setup, right? I could have gone long there right outside the zone. That's a new thing that we're working on in my room and my own trading. So this was the stop run we just talked about. This is the move that just went lower. Well, the sellers are still engaging. If this would have went down here and back up and this was positive, then I would have considered getting long right outside that zone. I don't want to confuse you guys because I have a standard way I trade these zones. But when ATR is 50, like it hurts. It just hurts to be waiting for a full ATR to put on the trade. Then I got to risk basically 100 points to make that trade. This is a way to kind of really reduce your risk. So it's still in the works as far as how I'm going to implement it in the trading, but just know there's stuff on the horizon to help, control risk a little better. But guys, even if I'm risking 100 points, ATR, so here, let's just put this in and I'll show you, right? ATR is just demanding that, and that means this market's probably going to move 100, 200, 300 points today from where we're at right now. Volume, from the volume event. So 11,465.75. In here, top of the zone was 11,465. The bottom of the zone was 52.50. ATR is a tiny 47.93. It's not tiny. So here, this was my point. Now, if I'm going to take a position right now, either way, I have to risk 120 points based on my strategy of putting my entering once the market gets an ATR out of the zone and stop on the other side. It doesn't matter. This is what the volatility is telling me I have to do. I just have to cut my size down, right? So I can trade, I can round up, I can trade a one guy, or I could trade 8.5, round up 9 micros. There's nothing wrong with trading micros. You want to be trading micros. If you're just trading, if your account is just allowing you to trade a one E-mini, mini NASDAQ, then trade micros. So so it's not all or nothing, right? So say I go along here and this starts moving in my favor. Well, I don't want to have to get out of the whole thing in certain areas because it may run 400 points. So there's nothing wrong with trading micros. It's actually better if you have a smaller account and then you can get out of 2 at a certain area or 3 or 4. You know what I'm saying? You're not all in or all out. All right, so I mean, for this instance, I didn't see what I want to see as far as being aggressive. Again, this is a variation. You guys probably have no idea what I'm talking about because I've never done this on these webinars. As far as getting in right outside of the zone, and the way I'm going to do that, say this comes down again, and then I see the net buyers, then I'll do that. Other than that, I'm going to trade this standard like I trade every webinar you've seen, same way I always trade these, right? So I just have to make a decision whether I'm going to get in just outside of an ATR, which is basically 50 points away from here, or I'm going to wait for ATR retest failure and get in. So there's 2 different entries. One's aggressive, one's conservative. Well, how do I decide? Well, I decide based on where we're at on the chart and what I think is happening, right? If that was like, this isn't a breaking out of an important zone, which it is, I think. Let's see. So we're right here, right? This would be out of this zone. I could go aggressive. There's nothing here. This is coming straight up to here. Or I can demand a retest failure of that zone. So we'll make that determination as it moves higher here. Hoping comes back one more time. So my point was, if this comes back one more time here, which it probably will, and say it makes a lower low from this last move, and then I see positive delta, and then it moves back outside that stop zone, and then I'll take it right outside the zone where I'm not risking 50 points. Again, a huge variation from what I've been doing, but there's a way to, in certain situations, to be risking less. But I'm still rolling the dice though because this ATR is so extreme right now. But we'll see. Any questions on any of that? I know I covered a lot there, Sam.
Yeah, your crystal ball's working today with those liquidity areas, acting as magnets. Would you?
That was really surprising, wasn't it?
Yeah.
It's a real shocker.
I mean,
can't believe it touched both and then took off.
Given that it happens like on a high percentage of the time, I mean, would you consider kind of backtesting and implementing a strategy to short into them, or is it kind of too unpredictable in terms of timing?
Well, no, that's exactly what Bruce was talking about with the heat map, or the trader map. This is a new add-on that they have. We did a webinar with him from my room a couple weeks ago, but you can see here, like, this is what he would talk about. During the webinar, he's like, okay, yeah, and the example that day was a yes, and there was like, it looked like that, and it looked like that, and we're like right here where we're at now. And I said, and he's like, and I look at the liquidity to kind of judge which way we're going, and I've always done that, but this is just a more concentrated view of that liquidity. And here it is again, by the way, it just popped in here. But I'm like, well, how do you determine? He personally would look at when he saw the aggressor come in, and he would get long and then play it into there. Whatever, I'm a little more exact with what I'm looking for. But the point is, yeah, you absolutely you can play it, but you just don't look at liquidity and just throw in an order, right? You'll get killed most times. You wait for something, either a volume event, obviously, or there was a volume event up here. Remember the stop run that I deleted. So the minute if you see that liquidity down there, you could be waiting. You see the volume event, you're like, okay, I'm short. As soon as it breaks out of there, and I'm playing down for the liquidity. Absolutely, you can have strategies like that, right?
Yep.
And you would be absolutely, you guys see it every webinar. I mean, I literally make golf bets for a round of golf, wherever comes to Arizona. I make it basically every webinar. I show you liquidity. Like here's one right here. This is gold. Right? So look below. Got a little band there, but this is, and they didn't get filled the first time up. So I'll bet you, let's see, I'll make this bet on gold, and I don't really like gold, but it's all the same stuff, guys. It's just guys playing games. I know that doesn't look like a lot, but relatively it's a lot. And this market will make it up to this. I'm not saying it's going to make it up right now. It might not even be today. We've seen, there's been plenty of instances where there's been ban. I think it was last webinar. There were bans of liquidity in crude. And actually, I think this is where I made the bet. I think it was last week. I made the bet that we hit that liquidity. Well, it didn't happen that day, but the next or that, I think it was that night or that next morning, it got to it, right? So point is, I'll bet you it gets up to here before, I'll even say before it makes a lower low here. Anyone, you want to bet a round of golf, put it in the room, and I will collect. And if you don't pay, I will fine you. So I'm betting that this makes it up. I mean, there's no volume event. The best way to do this is wait for a volume event, and then I really want to make a bet. But I'm just saying, just by eyeballing this, actually, I should probably go below this. But I'll even say before this touches 1882, it gets up to this 1912, which is 2 to 1. Right? I'm not saying put on a trade here. I'm just saying this is really important, and you can base trade strategies off of liquidity because, again, it's the big traders and the guys that run the show. All right, so this is going to be interesting. I want to.
Stocks 240 contracts.
All right, so that's the new. So once again, all these buyers jumped in. No dice, puke them out. But new volume event. It's actually in the same exact zone. It's a little more narrow. Let's just clear this out. So I'm going to do the same thing here. If this moves lower and I don't see selling, then I'm going to give this a try and get in like right outside the zone. It's way more risky. But when the ATR is off the charts, it's not a bad risk reward. Because if I'm right, the thing's going to move 300-400 points, and I'm not going to be risking a lot. All right, so that's your zone, I believe. No, so you see here, I drew that zone for this spike, but this popped up and it was still registering stops. I don't know how, but it does. I don't know why this isn't just, obviously buying isn't sell stops, but these are accurate, and I don't question it. But I have to move this up. See how this price line popped up to here during this spike. So I gotta now adjust that. Here's my zone. Let's watch the footprint here. This is what I want to see to potentially take this. This is very, very aggressive. I have not done many trades like this with the footprint, but I'm just finding a way to make it a little more, because some people just can't wrap their mind around ATR and having to risk this many points. So that's not the main reason I'm doing it, but I'm just trying to come up with better ways to not be risking as much. So let's just look at it. And it's not just not because I don't want to risk more, but if I see stop runs, right, like this is the stop run. Color, hold on. What was this bar? Remember, this is a 10 tick or a 10-point range bar. 1700. That's the puke. So what I'm saying is this goes a little lower here, and I see, and it goes like this, and I see net buying. Well, then the minute it gets out of that zone, I'm going to take it long. Like I said, I probably wouldn't try this at home because I have not done it very often. I usually, doesn't mean I'll still trade this zone, but I wouldn't trade it aggressively is what I'm saying. And this is ultra aggressive. So let's see what happens here. Oh, no wonder we're selling off. That is the ultimate indicator, my friends. When this man starts to open his mouth, you can go ahead and start selling. Every single time he opens his mouth, the market sells off. I'm not exaggerating. Someone in my room just posted it, actually. Thank you, Joe. So let's see what's happening in the markets don't like him. Let's see what's going on here. Is this the This is not accurate. There we go. You see, the sellers are still engaging, so that's no go on that. So what's happening now, if this can get a full ATR below here, retest failure, I will go short. I did, I wasn't going to go short aggressively for this, what we were just talking about. I mean, the sellers did come back in, but I'm going to wait for retest failure. Now, this is getting interesting. Right? One, let's go back to the market that I said I really wanted to potentially go long. Should be retesting this area, getting close. So there's nothing has happened in here since all of that buy ice, right? So I'm going to watch this now. I'm hoping we can at least get back to this, and then I'll make a judgment. Back to this zone, that was this last 1200 ice, and see how it reacts. I'm telling you right now, if this market comes back through this, like hot knife through butter, look out below. Is my call. So this is interesting, right? Look, this is why I draw these zones, guys. This is why I'm telling you that you want to understand how to draw these or get them from me, but they are very, very, very important. Opened up, tried to clear it, no go. Held this one, little tail, came up, tried to clear it, no go. Now, I mean, this is not really chart, so this could change. This could fill again, but right now, this is looking like instant rejection. 0. Just kidding. That's what I always hope for, but anyway, this is interesting. So now it reacts now to this zone is really going to give us a clue on what's going to go on now. If this holds again and gets back out of here, then this will be going up here today, is my call. If this fails, gets below this tail, we'll look out below. And this isn't even that important of a zone. I'm looking for down here. So yeah, guys, this is why you use real-time volume. I could come up with 4 different scenarios here based on these zones. I don't know. I don't know what's going to happen. How do I know what's going to happen? When I see a real-time volume event and the market reacts to it. That's how I know what's going to happen. Or I don't know what's going to happen. I have a high percentage of something happening. All right, so let's hurry up and put this in. That was the ATR. I'm almost positive there. So the bottom of the zone is 59.50. What's going on? Here is 8.93. New targets some points in this market today. And then the top of that zone was 65.75. It's already there. It was the other zone. All right, so an ATR out of there would have been 08.5. Did this get down to 08.5 is the first thing we want to check. I'm going to bet you it's probably right on the number. Hey, look at that. Real close. Because this is what another thing we're trading in my room. This game feels like every time. So anyway, that was 1 ATR. So what does that mean for me? That means this is a bearish setup. That was able to push a full ATR and that a little more outside of that zone. That is a bearish setup. Now if we go retest failure, I will go short. It shows me my price right on there. This is my conventional way of entering these trades, by the way. I can short at 1403. I have to risk 118 points. You may be saying, what? That is just silly, blah, blah, blah. It's not silly. I'm adapting to the volatility, like I said. Because if this trade works like I think it will, if this goes retest failure, this market is going to be moving 200, 300, 400 points would be my call based on the volatility. And where would that lead us to? Right down into this area. Zone. I would watch this for a small bounce, but this isn't that important of a zone. It was a little bit of a gap up. It was really nothing. I actually probably shouldn't even have that there for confuse me. I mean, we opened this, actually shouldn't even be here. I misdrew that. I was thinking this gap from right here up to here. I mean, it's not a terrible area because this is where we closed yesterday and there was a selling area. I'll leave it in, but I think we'll melt right through there. It'll give us more information too. If this just rips right down through that zone, this is where we're coming, down here. This first zone was directional conviction, buying tail, gap up. Right, this is why these are all drawn. Right, gap up. Directional conviction, buying tail, off to the races. This comes down and you're short. I would be getting out of some there if the market struggles there. If it rips right through there, that's giving you information too. That's how I use these zones. All right, so now we're waiting for a retest failure, and I will go short there. there is a potential that I go long ES as well. Because I want to see how this market reacts on this retest of these volume events. If this, first of all, like I said, if this melts right through here, watch out. If this bounces, gets an ATR, I'll take a long in here. I'm letting the volume events, you see how I don't like pigeonhole myself into thinking like NASDAQ looks like it might go to zero, right? Well, ES, if this holds this volume event, I'm going to go long. I'm letting the volume tell me. I have ideas, I have opinions. This is the ultimate, this is not an opinion. Tell you every webinar, this is the science, right? This is telling you somebody bought 7,000 contracts down here, right? So I will play that accordingly if that happens. This is the driver, real-time volume. I don't know if I ever mentioned that. Any questions, Sam?
Yeah, we've got a couple of questions here. Couple of quick ones. How do you see the current ATR?
For an ATR, so mine, this is just Thinkorswim. You can literally put in, I don't know the amount, maybe a couple $100, so you can actually pull it back out and still have access to all these charts, right? So you can see I don't even have much in here. What do I have in here? It's not showing up. I got like $600 in here or something. Yeah, $669. But I like it for the charting, even though the charts are kind of a pain in the ass sometimes. Anyway, it's just a 5-minute ATR. It's a Wilder's 14 period. And basically, I'm pretty sure any charting software has this. NinjaTrader, TradingView. This is just standard. This is default, right? So all this is 14 period standard. So it's just basically basing the ATR on the last 14 5-minute bars, and that's Wilder's. You can Google all this and go down that rabbit hole if you need to, or you can just bring up the chart and use that. That's what I do. I don't mess around with it, most things. I just let them be, and I built my trading around those, around stuff like that. Why is this not scrolling? Okay.
Perfect.
So that's that. What else?
How do you handle risk on an Apex account?
Apex, you're going to have, well, so Apex, highly recommend you guys use this if you're just starting out, if you're struggling. So on my site, that's this right here, right? And you can pick which one I do. I have 6 going right now because I'm trading different strategies. I'm going to show you guys a playbook here in a little bit. Like different playbooks are designated to their own Apex account. This is an incredible way, and I did this. The reason I even did this to begin with, I started it like last March. This show because I heard from a very reliable trader source. Here's the retest, by the way. It's a shocker. I've never seen this pattern either. That's a retest. If it gets within 10% of an ATR of the zone, which we did, within 2 points of that zone. Let me set this up first, and I'll go back to that. So this is an official. So far, I'm not in yet. That's your ATR. Here's your retest. Hopefully my room caught that. And now I will go short. What are my prices? Well, I got to make sure keep an eye on this ATR because it does change. It's 50.2. It's not going to change much. White short. Quarter. I can put on a 1 guy or 8. I'm going to pigeonhole myself and only putting on 1 because I'm not trading micros on this account. But if you're trading micros, I would be trading 8. You can round up to 9. Trade 9 micros. So let's put that in. 4/4. So what's 4/4? 4/4 is an ATR plus 10%. I force these markets to get outside of the ATR range to take the trade. Okay. That would be there. That's where I'll short it. If I get filled, where's my stop going to go? It's going to go an ATR plus 10% above the volume event, which is, again, 116 points away. I understand that. I understand this is what the volatilities tell me I have to risk on this trade. Like I said, if this thing gets motoring down, this is going to be moving 200, 300, 400 points is my guess based on the volatility. And I think we can definitely get down, at least down to the blue lug. And you see the red lug is holding right here. That's another, as far as context or thesis, you could say, hey, we held the red lug. Hey, a bearish setup through those zones. selling tail, like I just showed you, headed down to the blue lug. So if I get filled, that's basically going to be, unless I see, so, when I'm trading, I always leave at least one contract on until there's an opposing volume setup and or the major lug. So I have one contract on. So this puppy is going to stay on whether until we see an opposing setup that turns bullish, like one of these that turns bullish, or the blue lug. That's what I'm going to be shooting for on this short. So that's that. Still no retest of this iceberg area. We're waiting for that for yes. Actually, I missed soybeans. We'll go over there because I'll tell you why. I think that's going to rip too if it didn't already. Actually, it's lower, which makes me happy. So back to this. So I did an account with actually the reversion trade we're doing. Started at, actually I did a few, we were doing a different strategy back then, but then I did it for the one strategy we're working on and qualified. Actually, I qualified 3 different times, and all 3 times this is where you really have to control your risk, and I'm sure this is where this question is coming from, is because, they say, like, you go down here, let's see, get started. All right, so they say $150,000 full account. No, it's a $5,000 account, right? So, meaning risk-wise, you can only lose. So say I sign up today. Well, yeah, my account, you guys can see here. I can show you on this. I've got 6 accounts going over here. Bring this up real quick. These are all different trade strategies I'm using to test out playbooks, stuff like that. So you see how it says 150,000. Well, it's really what you can risk. And what's so hard about these is as this goes up, so you can see here where it says high balance. So you can see here, this account, this first one, this one touched $5,600, right? So now if I pull back 5,000 from that mark, I blow out the account. That's where it gets difficult, where you really have to control your risk. It's not, so when you open it up, start at 150. Well, you can lose down to 145 before you step out. Well, now, since that was my high balance, this could pull back to 150, 400. So I would still technically be profitable on the account, and I blow out of the account, right? So that's where you have to be, and I know that's where this question's coming from. So anyway, this is what you can risk, but I did it to prove that these guys do what they say they're going to do. So when the first day I qualified for this thing, I got my account like within hours, right? And I started trading live, and they're not even live right away. They keep you on sim, and you can read all about this. You still get paid. It's still a live account for payment purposes, and that's all you should care about. I don't care if they're trading, if my account's live or not. If they're going to pay me, that's all I care about, right? So you qualify, I go live, and then you get the same parameters. You can't lose $5,000. But what's great about when you're live, then the trailing threshold kind of stops, right? As far as once you get up to one, I think it's, again, guys, they have all these videos on there. I don't want to spend a lot of time on this, but it's $150,050. So that means if I go up 10 grand, so I go to 160,000. Well, on the tryout account, if I lose 5,000 from there, I'm out. On the live account, you got to come all the way back to there. So that starts to give you room as you grow the account. So anyway, I did it 3 different times. I qualified live and blew them out 3 different times because you can't lose that much back, at least initially. And then I finally qualified, and then I got paid just to show the room that they pay, right? Because a lot of people in my room are using them, and you should be using them. There's no reason, especially, and they have like, you get paid 100% of your profits up to 25 grand. Guys, when I was in a trading firm, they were taking 50% of my profit, 50%, right? And I always get that too. Well, if you made, $15 million over 3 years, where's all that money? Well, let's see, cut it in half for the firm, cut it in half, almost in half again for taxes. Guess what? It doesn't last very long. So my point is, this is a great, just across the board, because another thing is guys can't trade sim the same way. A lot of guys mentally are like, they just don't care. They're like, who cares? It's a fake account. Well, this, you actually have to put something in, and if you use the code, so if you go here, it's right there. The code, use that code, right? And it gives you half off of the account. Well, it's not a ton of money, especially for trading, but you're not going to want to just throw caution in the wind and don't care if you blow out the account because you got to re-up, or there's a reset fee. It's like $80, whatever. It's still real money, is my point. So one, that's going to help you trade where you're not just saying, I don't get because it's a sim account, because you are going to be losing money if you pull out the account. Then if you get funded, you're trading their money. Like, why don't guys? It is such a mental shift. I was just talking about this yesterday in my room. Somebody said, ultimately, you want to trade your own money. I completely disagree. Ultimately, you want to be trading someone else's money because it allows you to be so much more mentally free, where you're not afraid you're going to lose your rent that month, or your kid's tuition payment or whatever. When you have that backing, you can just trade. And you're like, even if you get blown out, it's not your money. Let's start it up again, right? So, highly recommend it. There are a bunch out there. This is the best one I've come across. I've tried the other ones. Even when I was getting back into the game, I was actually doing it for myself. Some of them are just silly, ridiculous. As far as, oh, you passed the combine, now you got to pass a live event combine times 3. It's just, this is the best one I've seen, put it that way. So that's the answer to that. I just got filled on this short. Hopefully it's not my MO getting filled to the exact tick, because I always love those. Oh, by the way, let's get some 6 strike going too. Maybe we can get this going in our favor. This is another thing you guys want to be watching. I should have this up the whole time, but very important. It gets on your nerves, especially when this thing's going against you, because you get to. So this is actually perfect. Why is this perfect? Can anyone tell me why I like to see another volume event right now? Let me know if anyone answers. They'll get an A+ for that. I'm going to send you an A+ sticker. Let me know if anyone answers while I draw this zone. No one from my room counts, by the way, if you're on here. No answer. Sam? Bueller?
Yep. No, everybody's quiet so far.
Anybody answer? So I guess my teaching, actually I haven't done it on this webinar, but that's all I ever talk about. So when there's a new volume event, what can I do? Well, I trail my stop to the new volume event, right? And I could potentially add to this trade. So that is the volume event. You see there, stop run. I started a little earlier because that swipe started the stop run. There's your spike, 273 stops. By the way, we're getting close to that zone. So I'm going to watch that potentially go along there. But this is the volume events are telling me to be short. So anyway, quickly, this thing is ripping around. 11404 is the top of that zone. Any other questions on that, I'll answer them in a little bit, but it's pretty straightforward. They've got about 85 videos that you can watch as well. Highly recommend it, so you don't you're not risking your own money. They pay. I got paid. Not a ton. It was like $2,700, but they paid. There was no nonsense. Then the account's still live. 11396. And your ATR is 49.37. All right, so now what I can do, we go down here. If I were to take a new short, I can short at this price, stop out at this price. Well, what is this price important now? Because now I can trail my stop to this price versus my original price. So that's 14.11.458.75. So watch the difference here. So instead of having this, did I even put the stop in? I didn't even put the stop in. Let's see what it was originally. It was definitely 50 plus points above this zone. All right, so my original stop was $59.50. So my original stop was at 11,459.25. Now it's at, that's not right. Okay, that's, I mean, it's not that important, but it was 50. So I'm playing this zone, right? What do I demand? An ATR plus 10% on that zone. So I was risking, so I'm able to move, my stop would have been up here. Now I get to move all the way down here because of the new volume event, and not because this is where traders make mistakes all the time. I'm not going to go on this rant, I promise, where I got this market's in my favor, I'm going to move my stop, I'm going to move it to break even. Okay, this is basically a break even trade now, but I'm not doing it to break even. I'm doing it based on something that happened in the market, not because I don't want to give back my kids' tuition this month, right? That's where traders make, guys, this is what these algos play for. They know the retail trader is trailing their stops, so when nothing's going on, then they start playing games with your money. Keep your stops outside of important volume. Not that this won't snap up here and stop me out, but I'm forcing this market to get outside of an ATR to stop me out. And then this is what I'm going to do too. So this stop, this is where you can make a little variation if there's a prior event. This stop should be at 58 quarter, right? So it should be right here. Well, I'm gonna move it up just outside of this zone to make it go through the volume event to stop me out. See how you can change that a little bit? So I'm gonna cost myself an extra 10 points if I get stopped out, but that's fine. Because I don't wanna stop out in Algoville where they play their games. I'm gonna force them to get through this volume event that they couldn't get through first time. See that? So now I'm not risking much for a 400 point move lower that I think might be coming. Right? And if this does, so what happens if this does stop me out? Well, if this comes up, even at 58 quarter is the ATR, that's now a bullish volume event, and now I'll actually look to go long if it does retest failure. So I would get out of that, and I'd actually be getting long. I would get out of it then, I'd get long probably. Now I do the same thing. I'll get long outside that zone. I'll cost myself 10 points. So I'll stop out, then I'll go long if that happens. Other than that, I could go short this volume setup as well and then have multiple positions on. So you can see on a trend type day, by playing the volume events the correct way, you can have 2, 3, 4, 5 positions on.
By NQ, 151 contracts.
So here's a new event. So I'm not going to move my stop based on this new event. I'm just going to let this go because there'd be there's a chance that you just keep moving it away from the new events, right? So if this holds, that's fine. Then that's going to be bullish, and then I'm going to play to the long side. You see how I'm letting the real-time volume tell me what to do? Because if I'm just staring at this, I'm like, what? Is this going up? Is this going down? Just like all these traders that are puking both ways. Buy stops, sell stops, buy stops, sell stops. Those are traders that are rolling the dice which way this is going to break. Do you want to roll the dice, or do you want to let the real-time volume and how the market reacts to it tell you which way the market's going to go? That's the key. That's the edge. All right, that's a lot of talking. Any questions on any of that? Let's draw this new zone.
Yeah, that was a really good explanation there. We've got a couple of questions. Oh, by the way, thank you guys for all your questions. We'll try to get through them. We've got a bit of a backlog here. A couple of questions on your actual setup itself. I think you kind of answered it just then, but Cherie was asking, at what point do you know the retest failed?
What point? If it gets an ATR below that zone. So
right.
This one, for example, if it went like say this just didn't happen, and we're playing off of this one. Well, if it goes this is why I wait for retest failure, because so many times you will see this is where guys try to get cute and play in these zones, and they're just like, I'm going to go ahead and risk. I'm not going to wait for a retest failure. I'm going to get long right when it comes back in the zone. Well, trust me, I would love to do that too. I've learned that from watching thousands of these, that it's not the best way to enter the trades, and you'll get run over. So meaning if this goes ATR retest and then right through, well, when it gets an ATR below there, that's when you know this is not a valid long event. Right. So it would have to fully get an ATR below here for me not to play the long side. Hopefully that makes sense.
Right.
That's not counting this new event either.
Yep.
So now this new event, I will watch to see which way this breaks an ATR and retest failure. That's how I'll do that. You could, let's take a look at the print. I'm even making, like I said, some major adjustments with this in certain situations. So like I was showing you guys a little bit ago, if I see 20,000 contracts come through NQ, well, then I can kind of say, like, here, let me just give you an example here. Again, this is not official yet. I'm not doing this officially yet, but I'm going to start because, like I showed you, that he has 60,000 contracts yesterday. If I'm waiting for a retest of the zone or waiting for it to get an ATR out of the zone and I see that, I could just hop in right when it breaks that bar and then I'm in, right? I don't have to wait for the full ATR is what I'm saying. I don't want to confuse you guys though, because you guys are trying to learn, the normal strategy, and that's the way to go right now. But I'm just saying, in my trade room we are working on, there's going to be adjustments. You'll see them as we go on these webinars as well. But, so I'm waiting for ATR retest, but for some reason, if I see a spike up to like 15,000 and it's like an up bar, well, guess what? I could just probably pop in there and then risk below the zone where I'm not have to wait for the full 50 points out of the zone. Stuff like that. But nothing's really happening here. Right? This is just like, you get some spikes, but 4,000 is a lot. Like let's just scroll through here and see what was the lot because there's going to be thresholds for this as well, right? And it depends on what kind of range you're looking for too. So you can see the most today has basically been, I'd say 4,000 for a bar. And again, this is just a 10 tick range bar, 40 tick, 10 point range bar. I'm not seeing much more than 4,000. So that's where you want to pay attention. You keep this up and all of a sudden you see 15,000 come in. You're like, okay, it's go time. On top of everything, you already know what's going on with the volume events, right? It's that's what drives markets. I don't care what crap you have on your screen. I don't care what squiggly lines, what moving average cross, MACD, Fibonacci. I don't care. Everything works occasionally, right? What they say, a broken watch is right twice a day. So it's like everything could work occasionally, but the volume is what is moving these markets at your important areas. If you get confirmation with this stuff at important areas, at whatever you're looking at, that's the key. So I'm not saying you got to be using what I'm using as far as, market profile, lugs. You're doing yourself a disservice if you're not using the lugs and Bookmap. But if you're whatever you're using and you think it works, great. Then if you get a volume event in that area and understand how to play the volume event, that makes it even stronger. Right? Questions?
Yeah, and another question on your setup, your volume events. Monkey butt.
This is really important here, by the way, if this gets inside here. So on this volume event, I could potentially go aggressive short this ice that just fired off, this buy ice, because that'll be back inside here. Like I told you before, this thing launched, came back, just bounced a little bit off of it. Right there, not a coincidence. That's why they're here. They're very important. If this gets back inside here, the rule of thumb is if you accept in a market profile composite, you expect the other side. And there you go. That's that 11.2. Hey, look at that. Right on line with that. That's exactly where I think the short can go, and any additional shorts I put on, minimum down to there, based on the volatility today. Sorry, go ahead.
Yeah. Monkey butt is asking. There's lots of icebergs.
Wait,
Lots
what?
of volume events.
What was it?
Monkey butt.
What's the name?
Monkey butt.
Monkey butt?
Yeah.
I like it.
I thought
Makes
you'd
me
like
laugh.
it.
He's
He's asking, how do you prioritize the volume events, basically?
By the most recent. So like I was showing you guys in ES when I didn't go along that event, because this stuff happened first, this light blue zone, that was the first buy ice came in. And then this came in last. This was more for my threshold. So for each market, I have a threshold that's important, that is worthy of trading. That's what my thresholds are. That's part of my SI indicator course. You can get it on my website or the Bookmap Marketplace. That's the original course. I'm still working on the new one, but it will be done shortly. But the point is, I have the thresholds. I explain the volume events in there and the thresholds and how I trade them, so on and so forth. So I personally wait for the most recent. I trade off the most recent one. I did say in my room. Here, I can show you guys. This is what goes in my room, right? This is why this is the benefit you get from being part of this. I'm not trying to sell you on it, but I'm trying to sell you on it. Let's see. So this is what I said right at the open. Making that 3K, so this is right when that started. This was that zone. That's the light blue zone. I said, I'm making that 3K, 3,000 plus buy ice zone, one big zone in ES. I just did that because it was like one right after another and another. So I did that initially, that's that. And then this came in again. I'm like, okay, well, I'm going to make this one big zone, or one zone on itself. The risk I did with that, you guys saw right at the beginning of the webinar, if I just made this one big zone and incorporated all of that stuff, I could have caught this long at the time. This was an exact tick retest of the zone within a tick. There you go. Right? Within one tick, and I could have gone long. I was playing off the most recent setup. But you can see that was 40 points outside. That wasn't that much. 30 points. But I wouldn't have been in until an ATR anyway, so that was 11 points. So I wouldn't have made much on that trade. I'd still be in it. So we still haven't retested this zone. So that's a long-winded answer too. I most times, unless it's like right on top of each other, I will play the most recent zone.
Okay, thank you. And while you mentioned your Discord there, someone was asking how do they get access to your Discord?
That's my trade room. So if you go to my website, because everything is on my website, discounts to everything on here. All these banners are discounts. Bookmap, Apex, Black Gamma's not a discount, but this is. If you want the hero, we haven't even looked at that. Let's see what that looks like today. I'll come back to that in a second. Tick strike discounts, that's this. This is very important. It gets really annoying, but it's really useful information. But just go here, buy trade room, and then these are your options. So you got the monthly, quarterly, yearly, and then you get percentages off my course as well. That's it. But that gives you direct, once you sign up there, that brings you, so if you click on that, that brings you to this page, and you put in, and then you pay it, and it brings you right to my Discord. And you can see. I get another perk in there too. Like I said, I'm posting now for all of these. I'm going to have a subscription I'm going to be putting up the next day or two for all of these. They're just so incredibly important. And then we'll get in a little bit. I'm also doing the playbooks now. So, so this is the newest playbook, DADA. I love naming this is actually a short version of, let's see if I can find that. This is this. So Dumb and Dumber, Aggressive Opposite Delta, DADA. So what I try to explain in my room, right? So there's 4 different examples here, and I'll be adding these in, and I'm probably gonna have a subscription to this stuff too eventually, where guys that don't want to be in the room, they could just come in here and get my playbooks. But anyway, this is what you want to do as a trader, right? And I go over this and I show you guys how to do this as part of if you don't do something like this, you're not going to be a successful trader. If you're just trading by the seat of your pants, every up and down move, good luck. You're not going to make it. I'm already calling it right now. If you have something like this, it just frees up your mind. So when you're first starting out, and this is why I do this, you can adapt my stuff, and then you can add what you want, but you can just look for that. This allows you to start scanning multiple markets, looking for this exact setup. So this setup, I'm giving this to you, right? Dumb and Dumber with Aggressive Opposite Delta, DADA, right? So you put in this is what you want to do for yourself. You just, because you want to start to see tendencies in these, but the main thing you need to understand here, like this is the first one that I've put in. See how fired off a Dumb and Dumber with 250 buy stops. That was that. At the 2 VWAP standard deviation. That was that. So if you guys have been on my webinars, the hundreds of them that I've said the same thing, there's algos that revert back to the mean. So here's VWAP. Everyone knows what VWAP is. Here's one standard deviation called daily value area. Here's 1.5. Here's 2. The setup is specifically looking for a stop run, a Dumb and Dumber. Dumb and Dumber is buy stops that fail, right? Specific at that area with a diverging CVD. We've talked about this as well. What does this mean? This means that there's more aggressive sellers than buyers, meaning more hitting of bids than taking of offers. That's important information. This is not red light, green light. You could have been saying right here, as this market moved higher, and this one it wasn't that, but sometimes you'll see this and you'll still keep seeing divert. Well, where do you get short? This is why the volume events help you to say, okay, now it's go time. So anyway, the setup is 2 standard deviation, volume event, Dumb and Dumber volume event with a diverging delta, right? And then if you get confluence, right? So say this happened at a lug or and this one was close to this market profile composite, then you can trade bigger, right? Because you're getting everything aligned. In this instance, it was just there. It was close to baby lug. There's a baby lug there. And then the other thing I noticed, this is what I was just talking about in NASDAQ that I was willing to do. That looks like we're about to get stopped out of that trade, by the way. Hold on. But it's not going to be that big of a loss because I got another volume event, right? Let's just see where we're at. I'm getting tortured by Mr. Tick Strike, so I know that was happening. And you can see they're selling the VIX. I'll come back to this in a second. I keep going to the wrong, it's the market map. So, if this stops me, I'll probably pretty much lose half of what I would have lost. Remember, I would already be stopped on this trade normally. I moved it outside of this volume event, and for a reason. See how it keeps struggling here? Doesn't mean it won't get through there, but if it does, I'm at least forcing it to get through there. That's why I did what I did there. There's a little variation. So anyway, back to this. So this was the buy stops here. This was the Dumb and Dumber event. What was this? And then I saw, as it went higher, I'm like, there's sellers. So this wasn't real buying. Stop runs, I know you can stop into positions, but most times you see stops, it's just the retail trader puking. So that's not real buying. It's not initiative buying. Then I see selling. Then I see more selling. Then it makes another high. And I see more selling. Then I see more selling that was right out of the bottom of the zone. You can go short, right? This is an instance, this is what I was looking for in NASDAQ, where you get it right away. You don't even have to wait. But this is an example. You guys hear me in every webinar where I'm like questioning, well, should I get in aggressively here, meaning right when it breaks an ATR out of the zone, or should I wait for a retest? This is where you can be aggressive. We're either right outside the zone, right there, because we just saw that selling. There was selling up here and then down here, or even if you just did the, my normal entry, you could still get in an ATR below there. But the point is, you're always hearing me say, yes, this is the most conservative entry is the most, it's the highest percentage for win. But if you wait for that, sometimes you're not going to get it. In this instance, after what I just showed you, if it hits my playbook, I can get in aggressively. I don't have to wait for the retest failure because you're going to miss the trade. And this turned out to be like a 150 plus tick trade, right? That shows that. Yeah, that was that. Then I show this is, you guys should be doing this on every one of your trade setups. And then another thing we use in the room, algo guy. This is exponential moving average, but on all four of these examples, every one of these was extended away from algo guy. Really, really great information. So you can see how this clear every one of these, right? So there's another one. This was, you can see it's not just one market. This was wheat, same exact thing, same exact thing, same exact thing. Here's another crude example. That crude, this is the crude. Looks exactly the same, doesn't it? Oh, because it is, because this is the playbook. Same thing. Same thing. Here's your algo guy, same thing. Do you guys see how this clears up your mind? And this was yesterday. I took this yesterday in the room on the AM webinar. Or actually, it was right after I put it in the room, though. Here you go. Now, this was the other way. Here's your Dumb and Dumber sell stops, instant rejection. This one I got in, I waited for the full ATR to get in, but I traded double size. Why? Look at the similarities here. This is the other way. Here is the sell stops. Goes lower, there's buyers. Like, well, the sell stops I know are real sellers, are guys puking, and then I see buying. I'm interested, I'm in. There's that. Look at that. Now this was confluence. This is why I traded double size on this trade. Remember I was saying when times it's actually at the lugs, you can trade bigger. It tried to peak below, 2 standard deviation, volume setup, go time. Playbook, to a T, the thing moved. I got out of the clay. Hey, look at that. You see any similarities here? All 4 of them looked exactly the same. So you can see if you have your playbooks, and again, I show how to do this in my room, and I'm going to be posting 1 a week so you can help get guys going, but you should be doing this for yourself. But you see how this frees up your mind. Now, if you're just, even if you have 1 playbook, you can sit there and scan every market and just wait. For all you people that say, I remember Bruce did a poll not too long ago, do you guys watch more than 1 market? It was like 80% said no. You're doing yourself a disservice if you're staring at shitty ES all day long, pardon my language. For the most time, it's just rotating back and forth, right? This way, you could be looking for that exact setup. So are we close to that setup here? No. Are we close to here? No. Russell? No. Dow? By the way, I watch all these markets. This is Dow, yeah, actually. That's close. So right now, what would I do? I would have to see what? We're getting close to 2 standard deviation. I need to see a stop run. And that's not enough. I need to see diverging delta. Do you see? Delta is diverging. So right now, I already know in my mind, listening, waiting for my verbal alerts. If I hear stops in Dow, I already know that's diverging. As long as this doesn't make a new high, you can see this was at this point. Actually, it was here. It's still diverging though. Even if it's like even the wheat, I'll show you the wheat. It was. As it moved lower yesterday or higher, this was not moving higher. So this will be a divergence unless this just spikes up like that. So everything's in place, right? So I already know that is ready to go if I hear stop run. So do you see how it frees up your mind if you're just looking for 1, 2, 3 playbooks? Crude, it's getting close. And guess what? If this moves up here, I don't know if there's a diverging delta. Let's see. No. So this one is not. See how the delta is moving with it? That's disqualified. So you can see how you can we'll be watching 5, 10, 15 markets and just looking for a specific thing. And you're not confusing yourself on every damn move that happens in the market, thinking you should be catching every damn move because it's not going to happen, right? This is why I call this waterboarding, by the way. I get to listen to the torture. while I watch the trade move against me. But what I will be watching here, if I do get stopped out, remember, this is the newest volume event. I could have moved this an ATR away from this, but I don't need it. I don't need to. If it stops me out, that's fine. I'm going to be playing along off of this potential setup here. So I don't even, did I put that? Hold on. I have no short-term memory anymore from all the torture I've taken in these markets. I did 11,435 is the new zone. The zone is like 21.5. Yep, 11,421.5. APR is 40. That's better. It's so ridiculous, but all right. So now, an ATR out of this zone would be 11,380, meaning that would set me up for a long, potentially a long on this. You just see it didn't get anywhere up there, so it would stop me out by then. So my point is, I could have put my stop above that for this newest setup. I don't need to see all that. If this is able to push through this zone, which it's failed a couple times, then I'm out, and then I'm looking actually for a long. But this is still potentially a short setup. Why? Because it hasn't been able to push an ATR out of there. Right? So I can still go short this too. Meaning I can add. I'm already short, but I would add. This is a whole new setup. Most of the times you get it as it moves in your favor, and that's what I was just talking about before this came in. I was looking to add to this trade where when you get a trending type day, obviously this isn't trending right now, but if this goes sell setup, I get short on that one, and then you get another setup, I get short on that one. These are all independent trades, and then you can trail your stops based on the new setups like I did with this one. And I'm not trailing it, so I break even. I'm trailing it because of a volume event. Okay. If that makes sense. Any questions on that? We're getting close to the time for your other guy to come on.
Yeah, you've been busy today. I didn't want to interrupt your trade there.
I haven't really done much, but yeah.
I'm not sure how you juggle trading and while at the same time kind of sharing all these insights. It's impressive stuff.
It is tough, mainly because I got to do it all on one screen, right? So it's like I'm watching all these different markets, and like on the webinars and stuff, I miss so many personal trades. Especially I'm doing all these other trades on Apex, and I miss so much stuff because I'm on one screen. It's hard for me to like when I'm by myself, I'm scanning. Like I have literally, I have 2 huge monitors, so those are like 3 monitors. I got 3 book maps on each monitor, so it's pretty much like I'm looking at 12 monitors. And when I'm on these webinars, I'm staring at one, so it makes it a lot more difficult. But I wanted to pay attention to this. So you had buy ice here. This is just the same, guys. It's the same exact. So for instance, I'm not going to draw this right now because it already happened, but it doesn't matter what market you're trading. That's why don't pigeonhole yourself into one market. Here's your volume event. Here's your buy ice. Hey, look at that. That was a couple ATR. This is the exact trade we're doing in my room. Hopefully somebody caught that. And then you had another volume event. More buy ice. And there we go. Missed that one too. This is the other trade that we're doing, but it's pretty unbelievable. It's just the same patterns over and over, guys. I don't know what else to say to you. And if you're watching one market and you're using Bookmap, you're doing yourself a tremendous disservice. Make a playbook, come and learn mine, whatever you need to do, and then start scanning markets for that one thing. And then when you get it good at one, then you can add another one. And then when you have 2, you're good at both, you can add another one. And you can see if you have 5 solid playbooks over 10 markets, you're always basically doing something. And you know this is what I'm doing too. Every time this occurs now, I'm going to put in the next example. So within 6 months, there's probably going to be 50 examples. How confident would you be in a playbook that you're working on if you just scroll and you look at it and you're like, you don't hesitate. You're not like, I don't know if I should take this trade. You're like, oh wait, no, I have 50 examples. I know this trade works almost every time I'm taking it. Right? And it's not going to be every time. It's going to be a high percentage. That's the edge. This is an edge. That's what trading is. Don't make me go on my trading in the zone rant quickly. It's, first of all, anything that can happen. Like yesterday, what was yesterday? New York Times just decided to throw out a random quote from a Fed guy and the market spiked like 20 points. It's stuff like that, right? That's why you need stops. But anyway, you're a casino. You can be the casino if you have an edge that generally puts the odds of success in your favor. Do you think if I have 50, I already know this is an edge, but after 50, do you think that's an edge? right? And then you just look for it. It doesn't work every single time. It's worked every time so far, but there's going to be losers. But overall, just like the casinos, I'll own the game and be a consistent winner with that playbook, right? This is what, actually, this is straight out Trading in the Zone. Read it. It's all about learning to trade your edge like a casino. It's just setups. So that playbook generally puts the odds of success in my favor. 5 fundamental truths. That's this. You can do everything you need to do over a series of trades. Like a casino, you can own the game and be a consistent winner. So I know over a series of trades with that playbook, it will be a winner, right? Because I have the edge. The edge, I just pointed out all the different edges in that playbook. The main edge is the volume event. This is the main edge. But then when you can add in things, you see, and then you can throw in a little more confluence, it's even better. So right here, right now, you guys can adapt this playbook. Look for a volume event. You want to, footprint's important. You want to see some selling. Look for extreme standard deviation. And if you want to throw an algo guy to make it even better, it's an extension of algo guy. There you go. All 4 of these, same thing. All right, that's my rant.
Okay.
Still being tortured in this trade.
Perhaps a couple more questions, guys, and I think we'll call it and let Scott catch his breath here. So Stephen's got a question. When you were going through your DADA, your setups, he was asking what setup do you find is the highest probability? I think you've got like a handful of setups that you use.
I've got a ton that I'm putting down and play. That, that's one thing that I've always lacked at it, and I've got to get better at it. Like I have setups in my head. Like I just from watching markets for 20 plus years, I have setups that I just know and I do. I don't have them all documented, so that's what I'm doing for the room. I'm going to start documenting them week by week, trying to put up one a week. But there's no, I can't hear out. Let me even I'll show you some of these. Right. So these are just the ones that just popped in my head that I take just off, just second nature. All of these, right? All of these.
Wow.
So you can see they don't necessarily have. I mean, after we do enough of these, you can go back and look as I put them in. If you're part of my trade room and I put them in the playbook, you can go and see. Okay, yeah, this trade works 80% of the time, but the volume events are the key to them, and then you put them in certain areas, like I was just telling you earlier. Whatever you're looking at with a volume event, make that a playbook. Come up with some variables, put that in a playbook, exactly like I do it, and then you have a trade. But percentage-wise, I don't know for sure. I don't even have them all down on paper yet, so I don't know. But I know this is the edge. This is the edge. I don't know how else to say it. Every webinar, it's the most powerful thing I've ever seen in 20 plus years of trading. If you can learn to understand how these should react and then add them into the areas you find important, you're there. Then you just have to work on your risk rules, which I give you. You can use mine, you can use yours. Again, this is the science. How you trade them is the art. If you don't like waiting for ATR retest, be my guest, do whatever you want. I don't like that either, but I've learned the hard way not to just be jumping in and waiting for it to show rejection of the area, so on and so forth, showing ATR out of the area. So I don't really have percentages on individual playbooks because I'm just putting them down. I will eventually, but I will. And if you're part of my trade room, you get those. You're going to be getting a weekly playbook. Eventually, I'll have them for a subscription on my website, but that's like ninth in line and all the stuff I got to do, including make my new SI indicator course. Completed, I should say. I already started it, but I got to complete it. It's still alive in this puppy. Guys, this is not coincidence. This market stopped here multiple times. I mean, look at that. Stop. Okay. This never got an ATR above here, so this, I still may be adding to this short on this setup still. Unless something new comes in, then I draw that zone and I play it the same way. All right, any more questions?
Yeah, that's a really nice trade. Well, hasn't worked out yet, but it's a good example of following your rules there. And you had your stop in place for your reasons, and it didn't hit it. A lot of retail traders there would have panicked out with that position, perhaps, but you've got it all set up.
Yeah, a lot, probably the majority of them. Yeah. And guys, that's what algos know. That's why they take your money. When they know nobody's coming in here, and they can see this stuff is just like we can, then they start playing their games in random areas because nobody's going to stop them in certain areas. Where they're going to be stopped is at volume events, or because why? Just think of it logically. The guys that got run over in this, so say this sell stop event, well, whoever's holding on, when it comes back, they get out. Well, that's why it does that, right? So these algos play games until they're stopped. What stops them? Big money and the volume events. The sooner you can grasp that, the better you're going to do.
Yeah. Nice stop position there, based on the volume events. Like you say, everything's based on the volume. But
right.
Yeah, so I think we'll call it there. I mean, we've got a couple more questions on the Apex stuff and access to your room again. But I'd recommend going to your website, scottpulcinitrader.com, or reaching out to you directly.
Or you can email me as well. You got my email, don't you, on there?
Yeah. Scott@scottpulcinitrader.com. There, I've just put it up.
Yeah, or support@scottpulcinitrader.com, either one. So you can ask me questions there. But as far as Apex, I mean, I'll answer the best I can. The best place to go is to go here and then go to, they got all these videos and everything else. But I highly, highly recommend you do this if you're struggling, or if you're testing stuff. You know, if you build a playbook and you want to test it, why test it with your own money? Test it here. If it doesn't work, then you don't lose anything. You just lose your entry fee or whatever the hell it is. That especially with the discount, it's not much. And then if you qualify, now you're backed. Now you still don't have to risk your own money. Like I mean, to me, it's a no-brainer. But you guys do what you want to do.
Okay, you need a rest now. You're done.
Yeah, need a little nap.
Okay, well, great stuff as always. I mean, thank you again for sharing your experience with us. It's and guys, please hit that like button on YouTube if you learned something today. These webinars with Scott, I think, are packed with value. And yeah, join us again next week.
Oh, and by the way, whoever made the bet here, get ready to pay up, because remember the bet in gold, and I hate this market, but my bet was it hits this liquidity before it makes a new low, and here we go.
I think that nobody took the bet. They were all too afraid to take you on there.
They used to take the bet, and then they learned quickly that you can see this liquidity. This is not the liquidity you want to be paying attention to. This is algos. I'm talking liquidity that's been in there forever. And that's the other thing you want to be using this trigger map. This is the new add-on. You can get it in the Bookmap. I think it's part of Global Plus. This is this, right? So this shows this. That's the liquidity I was just talking about, but there's more up there. Some days it's not going to be clear cut. This looks rangy to me. Does it not? This is a yes. Right? And you just have to determine based on stuff. It's like, you see right there, that was pretty funny. That was whoever's been sitting here all morning. They just moved it lower. They're like, I don't think we're going up. Let me see if we can get filled here. Very important information, guys. Like on top of everything else. And you get a volume event, and you're like, okay, well, maybe we'll tag that. If we get a short volume event, then you're playing into this stuff. This is just, guys, this is it. This is the information. I can't say it enough. All right, that's all I got. Really nothing again today, but actually a lot of teaching moments, so that's good. Hopefully you guys learned something about the playbooks and so on and so forth. So.
Yeah, absolutely.
Yeah.
So yeah,
see you guys.
I think you join us again next week. Yeah, I would recommend soaking up as much of this stuff as you can. So we'll be the same time next Thursday.
Awesome. I appreciate it. I'll see you guys next week.
Yep. See you guys. Thank you.
Thanks.